Hello, everyone, and welcome to our Twitter Spaces today on an insider's view on crypto compliance with the Bitstamp US CCO and CLO. And we are going to have Jacqueline from TechCrunch as our moderator. Just going to wait a couple more minutes to let the room fill up, and then Jackie, you could take it away.
Yep, sounds good to me. All right, I think we could get started, and as more people come in, they could just listen in as well. But hi, everyone who's here. Thanks for joining us today for Bitstamp's Insider's View on Crypto Compliance Twitter Spaces. I'm Jacqueline Melnick. I'm going to be hosting the panel, and I'm excited to be joined by the speakers, Thomas Hook, who is the U.S. Chief Compliance Officer at Bitstamp and a professor at Boston University School of Law. We also have Rika Kudaran, Bitstamp's Chief Legal Officer. Thank you to both of you for joining. And I'm sure we have a lot to talk about given the recent events transpiring in the crypto space. So I guess we could just get into it. How's that sound?
Sounds great.
Okay.
Sounds wonderful.
Okay. And to start, there's like a lot of fear inside and outside of the community right now, kind of what I was hinting at before, surrounding crypto exchanges. As I'm sure everyone listening is aware, thanks to the FTX collapse. So how are crypto exchanges like your own, Bitstamp or Binance or other major ones kind of different from the FTXs of the world? And how and why should users trust them given everything going on?
I'll be happy to kick off with this question. So I think it's important to know that, of course, we are not privy to the internal workings at FTX, and judging purely from the documents that were filed so far in the bankruptcy proceeding, I'd say the answer to this question is a lot. A lot is different, and it starts with overall culture and setup at the company and the business, and it boils down to day-to-day activities, internal controls, composition of the team. It's really a broad question. I think I wouldn't, sweep everyone with a very kind of one brush and categorize exchanges. I think it's important to look at, the fact that we've been in business for 11 years. It's important to look at the composition of our team. Almost 30% of our team is comprised of legal, compliance, internal audit professionals, and really looking at the track record and not be distracted by certain short-term events and news that happen in the space.
Yeah, I think to add on that, I totally agree, Rika. I've got experience in traditional finance. I've consulted at a variety of financial institutions. I've worked in crypto firms before, and a big piece of it is really that strong governance and culture of compliance, embedded in certain places. But then the question is, how do you see that from the outside in? And it's exactly what Rika's talking about. Having a team of experienced leaders with different backgrounds. At Bitstamp, we've got folks who come from different areas of traditional finance, different areas of fintech, from crypto itself. And that variety of backgrounds, experiences, and knowledge just helps to ensure that we're building new things, but doing it in a regulatory, compliant, and a risk managed way. Looking for firms that are licensed and audited. The licensing piece is important, especially from a global perspective. But really, it's that strong culture of governance and compliance, and that being shown through the activities of the company externally.
Okay. And with all that kind of said, between, centralized entities and decentralized entities, how are crypto companies actually regulated, and how can they remain within compliance standards that exist today?
So maybe I'll kick this one off, Rika. I think there is definitely a misconception or a continued misconception that crypto companies are completely, unregulated and unlicensed. That changes on a day-to-day basis. There are a number of licenses. There are a number of regulations that crypto companies have to follow. For example, In the US, Bitstamp has over 40 licenses. We've got 50 licenses globally. I talk to regulators on a daily and weekly basis. We go through periodic regulatory exams. We have to do periodic regulatory reporting and have a constant dialogue with our regulators. So, there certainly are, as I'm sure we're all aware, certain areas that are unsettled or still up for debate in terms of who's regulating what and how that's working on a federal level. But certainly in the US from a state level, and certainly globally, you're seeing more and more jurisdictions create specific standards for what are known as VASPs, virtual asset service providers, and like Bitstamp, other companies have to hold to those standards and be subject to examinations related to them. It's continuing to grow and get better in that regard.
Yeah, I agree. I think there is this big misconception that crypto space is largely unregulated. And I think it's really important to understand the difference between technology and software developers and builders and intermediaries and parties and firms that interact with the technology and build products on top of technology. And when it comes to intermediaries, it's a heavily regulated industry. As Tom mentioned, we interact with almost 40 regulators in the US. We're subject to money transmission regulations on a state level. If crypto firms or companies, let's say they build and offer derivative products, they would be subject to a CFTC regulation. If any firms or intermediaries in this space offer investment advice in securities, they would be subject to other regulations. So the notion that crypto space is unregulated is largely unfair and mistaken, I would say. It really depends on what kind of services and products a company offers in this space.
Right. Thomas, you mentioned that you speak to regulators on a weekly basis. I'm curious, what are the regulators saying right now? And what are some of the standards that they want to implement going forward?
So, I think a lot of the conversations are around exposure to everything that's going on. And, I think it's just heightened all the regulators to our types of companies to, check in more closely and kind of have a health check, I guess, if you will, with those that they oversee. They're for me and for other exchanges or crypto companies who are regulated and licensed, we go through exams. So there's a constant consistent checking and testing by our different regulators, as Rika said, with 40 plus regulators in the US. The exams are not infrequent, and so there's a constant dialogue just by virtue of that. So there definitely there's consistent dialogue around the controls and the risk protections that we have in place, from anti-money laundering to consumer protection to financial stability. And, I think in terms of what they want going forward is, from a US perspective, they're looking at us in different ways. And I think the regulators are looking to build out more and more of their expertise in this space and having a consistent dialogue with those that they oversee to make sure everyone's on the same page, to make sure they understand what we do, how our controls work. And so I think it's, if anything, it's a more constant dialogue that's coming from this, which in some ways is a good thing, right? We have to work hand in glove with the regulators if we want this industry to keep growing and attract more consumers.
And in terms of the growth of the industry and kind of like the conversations that you two are having with regulators, how do you think things have shifted, or where do you kind of see it going in 2023?
I think it's of course hard to make any predictions at this point. I think it's completely horrifying and devastating how many people lost money in their savings due to the recent events. I'm a strong believer that the worst thing to do right now would be rush into creating regulations without understanding what exactly happened and why it happened. So we will definitely see some regulatory activity in 2023. I just hope that we will use a balanced approach, and I hope that we continue communicating with regulators and the regulators continue communicating with the industry participants to come up with regulatory regimes or just existing ones in a way that makes sense and doesn't really, stifle growth of this beautiful technology in the US.
I agree. I think, the this has created a hole that as an industry we have to climb out of, right? And having that dialogue with with the regulators, of course, but also with consumers as well is incredibly important right now to build back that trust and show and explain that what happened with what happened with FTX and Alameda was what a company was doing, or companies, right, under that umbrella, not what an industry was doing. And I think that's really important.
Yeah, I think, and I know a lot of people are already talking and focusing on this in the crypto space, but it's tremendously important to make this distinction that what happened in FTX and Alameda was a human failure, not failure of blockchain technology or crypto industry as a whole. And imposing stricter or additional regulations without understanding what exactly went wrong, why it went wrong, and how the new regulatory regimes could affect the technology would really be unfortunate if that happens.
Yeah, I 100% agree, and I think it continues. When I think to when I first started in the crypto space, I previously worked at Circle, and I've worked in fintech, before. One of the, I think what was important for me then was to be an ambassador, as a compliance professional, as someone who's worked in traditional finance and is now dedicating my career to fintech and crypto, was to show them back then that this wasn't, your, garage crypto. This wasn't people in hoodies and they're in garages building this stuff. These are, true professionals coming from all walks of, all industries and walks of life to bring their careers and their expertise to helping change the way that we move money, and conduct finance in the globe, and that still exists, right? It's still people like Rika, who's an incredibly experienced securities attorney and working in this space, and folks on our management team that are dedicating their careers and professional expertise to this space. That still exists, and if you put those minds together, we're going to get to the right place, and we all have to act as ambassadors to the regulators and consumers to show them that's not changing.
What do you two think is missing from the regulatory space right now? As you continue to work closely in the area, Thomas, you have the background in it, and Rika, you came into this space. What have you noticed in terms of what's really not present today that needs to exist?
I guess the words that come to my mind are kind of cohesion and clarity. I think we still have, globally and federally, I think there's still obviously some questions that need answered, or, specific guidance that needs to come down. I mean, there's, we are a good actor. There are lots of other good actors in this space who are doing all of what we think are the right things in the right ways, and looking for that continued guidance to create a level playing field, a continued level playing field, not just in the US, but globally. And so I think that continuing to close those doors of jurisdictions that aren't, heavily, or that are not regulating the space, those doors continue to close, which is good for all of us. Because more consistent and stronger the standards become across the board, not just in the US, but globally, the better it is for consumers, and the better it is to weed out bad actors who've, just been trying to, squeak by, meeting certain obligations.
Yeah, I couldn't have said it more elegantly, Tom. Cohesion and clarity. I think you really nailed it. It's a clear understanding of the different functions between different industry participants in this space, and also clarity around the nature of some digital asset and which regulatory regime should apply to them. And because we have this continued lack of clarity, anyone participating in this space, including intermediaries who transact and enable transactions in these assets, they continue to exist in this ambiguous regulatory regime. This largely drives a lot of business offshore. And as we have seen, that's not really a good thing.
For this idea of cohesion and clarity, where will it come from, though? Do you think it'll be in the responsibility? Will the responsibility be in the hands of those in the industry, or should it be coming from regulators globally?
So I think it's a bit of both. I think it's important to continue the dialogue, not only between industry participants and regulators in one jurisdiction, but also between regulators around the world. I think the current regulatory approach to digital assets is rather siloed, and you have these haphazard regulatory regimes where different jurisdictions apply different laws and regulations to the same activities, transactions, and same digital assets. I think it will still take some time to achieve this sort of level playing field worldwide, but it certainly starts with education and listening carefully to each other and industry participants, continuing discussions with regulators and educating them on this technology, and regulators also, voicing their concerns and working together on trying to understand how we can address their concerns of consumer protection, investor protection, without really foreclosing, the doors to digital assets in the U.S.
I'd echo that. I think it's got to be a two-way street. It has to be the involvement of those working in the space, the experts in the technology, and how the technology expresses itself in a business, in a company, and the controls and risks associated with it. And that has to be paired with the regulators whose job it is to ensure that they're protecting the consumers and the industry participants. And so working together is the only way this continues to happen. And what you don't want to see out of event like what's going on or what happened is to create an animosity between the two. We still need each other on both sides to get to the right place.
Both of you have been in crypto for a number of years now. So just not looking at this moment in time, but throughout your careers in crypto, so to speak, I'm curious, what has been the biggest challenge for both of you in terms of navigating crypto and compliance, both internally and externally?
Sorry, so the impact. Sorry, repeat that question again. I want to make sure.
Yeah, for sure. I guess throughout your careers working in crypto, what has been the biggest challenge in terms of navigating compliance and crypto together?
I mean, I can I guess start from my experiences. It is this is I would say probably the biggest challenge, but also the reason that I'm in the space and enjoy it so much is the technology is constantly evolving, as is the regulatory landscape that kind of goes with it, and they're not always evolving and changing at the same time, right? So it is the goalposts are constantly moving. You have to do a lot of problem solving and face novel challenges to make sure that you are continuing to put the right controls in place, and helping the business grow in a regulatory compliant way. And that's you know um, in a more traditional role, a lot of it is well trodden paths that you're just kind of implementing in new ways or kind of um, adapting to a different company. Here, you're adapting it to new technologies, new customer behaviors, new control technologies that exist. So that's been, I think, personally making sure that I'm up to speed on as much of this as that's going on. Not being a technologist myself, right? Being a compliance professional, but then also being the point person at times to explain that to regulators, or our different partners, and how the technology works and how we control the risks associated with it. So that's been, I'd say, the biggest challenge and the biggest, joy at the same time.
Yeah, we're all on the same page, Tom. I think one of the biggest challenges and what makes it interesting is fascinating is trying to understand to the best of my abilities as an attorney how this technology actually works, and based on that try to understand what regulatory regimes might be triggered by various transactions and products in this space. And that has been a moving target, certainly, but a very very interesting very interesting journey. And I think what's important also, I'll add a bit, is in this space the ability to take a step back and think, all right, we have this sort of continued ambiguous regulatory regime in the US. Let's take a step back and let's think, what are the regulations are meant to address? What kind of conduct are these regulatory regimes meant to prevent? And a lot of it really boils down to information asymmetry and whether or not the participants have discretion over customers' assets, and then just trying to understand the underlying principles behind any regulatory regime and just navigate those and stay compliant.
Do you think, Rika, are there certain regions that are perhaps primed for better success or will advance at a quicker pace given their regulators' efforts to create new frameworks, whether that be like a country like the US or a region like Asia, Europe, and so on? Have you, either of you, both noticed something like that?
Can I ask you to repeat the question again so I understand?
Yeah. So as you work in this space and talk to regulators globally, are there certain regions that you think are primed for better success or perhaps might advance at a quicker pace given their regulatory efforts?
So we've seen generally two approaches worldwide, right? Is on one hand, you have jurisdictions that are creating regulatory sandboxes and putting together new regulatory regimes to address crypto and digital assets. And on the other hand, you have jurisdictions that are trying to feed new technology into existing regulatory regimes. I personally think because this is a very fast moving and evolving technology, I think gaining understanding of the technology and then thinking through how the existing regulatory regimes can address some of the concerns that the regulators might have is really a more organic approach rather than creating a new set of regulations just because the technology is moving faster than the regulators and the lawmakers. So I definitely think it makes sense to approach it. There is this concept of functional regulation where we don't regulate blockchain or crypto industry as a whole. I don't think it makes sense to regulate technology or software development, but we really look at how different parties interact with this technology, how they use it, what kind of products and services they're building using this technology. And then in most of the cases, well, frankly, in all of the cases that we've seen, depending on what each industry participant does with the technology, they'll probably fall into one or other regulatory regime anyways.
And I think just to kind of add there is it's I think that was all really well put, Rika. And I think it's the different regions are going to play off of each other, right? They can't exist in a vacuum. So, if the EU as a region is moving faster with MiCA and their regulatory regimes, it's only going to put pressure on the US regulators to coalesce faster because I think everybody sees the the potential impact in the future that this technology and the companies that offer these products based on this technology can have to an economy. That can't be ignored, and so it's almost an arms race, right? To get it regulated right, to draw the companies, to bring the consumers, and then everybody wins. But it'll be interesting to see, how U.S. reacts to outside the U.S. Regulation and vice versa as that changes.
Right. Taking a step back from this, what are some common mistakes crypto companies are making in regards to compliance and operating with the current legal frameworks that you two are seeing?
So, Jacqueline, this is maybe an interesting one. If maybe I can kind of ask back to you on where, to flip this a little bit on its head.
Sure.
Does it? Yeah. What I mean, I guess, what are your? Do you think that folks understand even what it takes to run to operate in this space?
Yeah. Feel free to finish your thoughts. Sorry, go ahead.
No. Operate this space, just like, how, what do folks, what do folks like Rika and I do on a day-to-day basis? Do you think folks understand that?
I think it will definitely vary. And given the conversations I've had, a lot of protocols and projects perhaps don't even know how to operate within the current legal frameworks, given that a lot of it is geared toward traditional finance. And while crypto can be argued as perhaps a derivative of that or a deviation of that, it's not the same, as we know. So a lot of them are scratching their heads over how can they operate in a way that they can exist later on down the line, whether that be in a way that they thought was a good actor in a sense, or whether they were doing it in hopes that perhaps compliance never came. That's kind of the conversations I've been having and seeing as well. But I had a panel on this a month or two ago, where basically one of the panelists said, if you can't go in front of the judge and explain why you have a reason to exist, then perhaps you shouldn't exist at all. So I thought that was a pretty good indicator. But I guess for you two, I'm curious, have you seen mistakes within other crypto companies in regards to compliance and operating within the current legal frameworks? Or is that something that you're not really observing much of?
Yeah, so that's really interesting. I love that quote too, right? Can't justify why I exist in front of the judge. Maybe you shouldn't exist. It's totally fair. A lot of, when I think about just on that quote, the decisions that I make, in terms of what we do from a compliance program is, can I explain why we did what we did to a regulator? Because like you said, a lot of these companies are coming up with questions that nobody actually has an answer to. And so it is about understanding the controls that exist. I think this whole industry is trying to put finance on its head, right? But traditional finance has gone through the trials and tribulations and created some processes and some controls and risk management techniques that just make sense. And maybe they're not meant to be a mirror image in the crypto space, but the same values or purpose, can be translated in a different way. And that's, I think, some of the problem solving that I was, talking about earlier, that I think is fun about what I do, and I'm sure Rika enjoys as well. Although obviously on some days it's less fun. But we only know what we see, or kind of what we talk to folks about. But I feel what's important that maybe isn't identified probably early in some of these early stage companies that are thinking of themselves more like a technology company, is that you are a technology company, but you're also a financial institution, more than likely. And operating in that regulated space is very different than just operating as a technology company offering a technology service. And so embedding that like fundamental what I'll call like a culture of compliance or a culture of risk management in the thought and act in the way that decisions are made and the way that products are planned. Having that thoughtfulness early and often is how you can at least put a stake in the ground as to how you're going to approach them going forward and deal with it, a judge and explain why you did certain things. Or, more than likely it's hopefully not a judge, it's just a regulator. This is what we do, this is why we do it, and here's how here's the risks we saw, and here's how we protect for them.
Yeah, I think it's striking that balance between being in this disruptive tech industry, but also because a lot of disruption, and of course blockchain and crypto goes well beyond finance, but a lot of disruption happens in the financial services space, and that equals heavy compliance and rigorous internal controls and diligence and responsibility over other people's assets and finances. So striking the balance and also understanding sort of your as a company or a firm operating in this space, understanding where on the spectrum from a progressive disrupting tech company to financial institution, where do you fall and what your compliance obligations should look like. And in general, I think, like when I think over the past, well, not just in the crypto space, but even like kind of like a general macro backdrop to what's happening, if you look at the past 15 years, we've been incredibly, I think, very, very fortunate to experience really favorable market conditions. And some people, myself including, built our entire careers during this unprecedented market conditions where it was really hard to invest in something and not make money long term. But the global financial and economic environment is changing. And what I think is important for anyone operating in this space is like a little bit of a reality check we're going through right now, is to focus on what's important, to keep our heads down and continue building and making sure we're very diligent about what we do if it comes to financial instruments and any transaction involving financial assets.
Which areas of crypto do you think regulators should look at first when prioritizing the creation of new laws in 2023? I know you said it's hard to predict. You don't have a crystal ball, of course, but what's important to you two, given the events that have happened this year, and where do you think regulators should focus first?
Well, I have very strong opinions on this subject when it comes to crypto and regulations. I think we've spent a lot of time and resources trying to figure out how to regulate software, and I don't think it's the right approach. So focusing on intermediaries that interact with the technology and looking at kind of what it is that these intermediaries are doing is what really makes sense, rather than trying to regulate the technology as a whole. And it's coming back to this idea of regulation by functions, right? If you're a custodian, there are already existing regulatory regime. There are certain things you cannot do and certain things you can do. If you're a financial intermediary, and a dealer or broker, there is already an existing regulatory regime. If you're creating derivative products out of commodities, there is already an existing regulatory regime. So maybe honing down on how that applies to crypto firms rather than introducing sweeping regulation that would capture all crypto assets out there.
I can't agree more with Rika there. It's kind of the approach to that you take to running a compliance program or a legal program. Like there is existing stuff that we're not making this up in a vacuum. Frankly, I think if you're making it up in a vacuum, then you're losing out on decades and decades of experience that you can rely on. But we can't, it is fundamentally different than anything else that we've ever dealt with, and you need to act accordingly and regulate accordingly. And I think it's taking a novel approach. I mean, we work at a centralized exchange. That's as regulators and as an industry, we're struggling with this, the centralized piece to this. The decentralized aspect to it is even harder, and is going to just become of more increasing importance.
Jacqueline, you talk to a lot of people and a lot of different companies and participants in this space. Maybe you can also share what you see people are talking about and what they prefer to see coming out.
Yeah, definitely.
In terms of regulations, yeah.
I think one of the biggest focus I've heard is on stablecoin regulation, thanks to the Terra Luna situation back in the spring. But also, even prior to that, governments globally were talking about CBDCs and the importance of those potentially in line with stablecoins that already exist. And they want to provide frameworks for people to operate within on that front. It's funny, I said this in the past as well, but with stablecoin regulation after the whole Terra Luna explosion, so many regulators, at least in the US, were calling for immediate action. And it's been a number of months, and yet nothing has really happened yet. And I understand these things definitely take time, but I think that will be the first operation, at least in the States, that will be focused on in 2023. There's also the conversation surrounding DeFi and crypto exchanges as well, and protecting retail consumers and investors in general, and how can they operate in a way so that something like this with FTX doesn't happen again. I think those are the two major key areas that, at least in the States, because I mainly focus on America for my reporting, I think that's going to be a big thing going forward.
This is interesting, right? Because when I think of Luna Terra, I'm thinking about kind of like I think of it as a failed concept for an algorithmic stablecoin, and then when we think about Celsius and BlockFi and Voyager and 3 Point Arrow Capital and everything else, it's sort of like a failure. More of a human failure, right? And a failure of internal controls and management and, overly risky practices and whatever it might be. So again, there is a bit of both, and how these two events are connected is also very interesting. And from regulatory perspective, what do you focus on first? Do you once again try to regulate this new technology, or do you focus on intermediaries transacting in this space?
Yeah. And there's definitely different intricacies to each of them, and I don't want to put them all in a pool together, as you mentioned. But that kind of sparked a thought in my head that I'm curious for both you and Thomas. What are some red flags the market should be aware of and looking for going forward in terms of compliance and perhaps bad actors in the space, or things that almost seem too good to be true?
I would say, and again, I think we might have been caught up a bit in the crypto craze of 2021, but exercising. I always think about the days. I'm sure everyone remembers the days where we questioned several times whether we should buy something online with a credit card and if the website could be trusted or not. And that was always in the back of our minds many years ago, if we should be putting in the credit card information online. And these days, it's really not even a thought. Kind of exercising this judgment and common sense and thinking through who are you really dealing with on the other side, because this is a new technology. This is a new and evolving space. and maybe not just rely so easily on, just on like on the fact that the company is just out there and doing business, right? And doing a little bit more diligence and a little bit more research. And there are certain things that good actors are already doing in this space. They might come as, the lack of those might be a red flag, but it's good corporate governance, it's internal controls, it's having independent audits, it's being under the oversight of a serious regulator. Sort of all the things that, that are kind of business as usual for a lot of actors in the space, especially if we're talking about fintech firms. But to everyone's great surprise, is not business as usual for others, right? So it's really just checking and making sure the very basics are there, and understanding that if you're going to transact on an unregulated platform that's located offshore, that's not under oversight of any of the serious regulators, right? You're taking certain risk.
Yeah, I hearken to what you said, Jacqueline, and too good to be true. I think if it's too good to be true, it is. I think those are big red flags. Those are going to be marks that something's not right internally, and look to see, how long companies have been around, how big is a company. There are pieces of information, there's resources out there that compare companies and everything, but I think it's about education. I think we're at a point where it is about educating the retailer or the consumer, whether it's retail or institutional, on how the industry works. Dispelling rumors like we're trying to do in some of these, some of this dialogue here. To me, it's education, and it's the more that you know about the differences. And it's all of what Rika listed. I guess, Jacqueline, what are you hearing from others as like things that, flipping the question to you as you hear it from lots of other folks as well, what kinds of red flags and what kinds of things are you hearing from other industry players? Or I guess participants more so, right?
Yeah, I mean, it's hard to kind of pinpoint that, kind of what you two are referencing as well. It's like the red flags perhaps existed beforehand, but you couldn't exactly figure out how until you get inside these private companies. I think a lot of conversations just need to be had in the future around transparency, intermingling, and this incestual behavior that we see within the crypto industry. And it's totally fine for, I think, crypto companies to have like investments in that cross over into different pools or buckets that might be seen as an overlap, as long as it's transparent and that there really is no conflict of interest, is what I'm hearing. I think there really is no perfect answer. The constant thing that people funnel is do your own research. And like I said before, if it's too good to be true, it probably is. I personally steer clear of a lot of things in the crypto industry just because, you can never know. But yeah, I'm trying to think of the right words to say here, and it's kind of hard. So kudos to you two for explaining it way more eloquently than I did. My final question for you two, given that you are experts in compliance, what would be your one-liner or biggest piece of advice for those going forward, given everything we kind of discussed?
Don't rush research. I'll add a bit to this one line. I know it was supposed to be a one-liner, but I think if you're new and you're just coming into crypto, definitely do a lot of research before interacting with these assets. We have a fantastic Learn Center that we recently launched at Bitstamp, has a lot of very useful and interesting information. If you're already an existing participant in the crypto space, talk to your counterparties, call your counterparties, ask them questions, find out what's happening, ask for transparency. So I guess take a bit, look into things before diving in.
Yeah, I agree with the sentiment. In my head, while you guys were, I was is the Jeopardy song, like during Final Jeopardy. I was trying to think of like a good answer here. But I think maybe a way to say it is trust but verify. There's a lot of really good actors in this space. There's a lot of dedicated people here, and certainly confidence is shaken. But there are companies that are transparent that you can trust, and if you verify, if you ask the questions, if you ask for the information, you should be able to get it and get comfortable with who you're dealing with your counterparties or any new fad that kind of comes along. You should be able to verify what's going on, and so I'd leave it with that.
Great. Well, Rika, Thomas, thank you so much for taking the time to share your thoughts and entertain all my questions. And thank you to everyone else for listening in.
It's a pleasure, Jacqueline. Thank you.
Thank you, Jacqueline.